Ta-da!
All right, you're on.
Good morning, everybody. How are you all? Thank you so much for tuning in today, especially as it's a holiday here in Canada, and I'm not sure, I know it's Columbus Day in the States, and I'm not sure, though, whether it's actually a day off for you or not. So if it is, thank you so much for tuning in to us. We're really grateful to when you come aboard, because it's just so much more exciting to talk to people than just to talk to a screen, don't you think?
I think so, Eileen. Yeah. That's for sure.
And if you haven't met us before, I'm Aileen Akins, and this is my partner, Catherine Hansen.
And there we are.
We are the two blondes, and we are the Profitable Salon owner. You can see us there in our lovely, getting very dated picture with our book, Secrets of the Profitable Salon Owner. And our mission is to get you profitable fast. And what better way than to talk about income and expenses?
Oh, yes. And I love this saying, because to me, it sums it all up. And actually, when I sent this to Susie at Vagaro to put on as our topic, and she said, "Is there a typo there?" And I went, "No, it means exactly what it says. Is there too much months at the end of your money?"
Yeah.
So basically, your money runs out before the month runs out.
Yeah. And I hate to say it, I've had that happen.
Yeah, and it's not a fun place to be in. And as a business owner, and when I speak about business owners, whether you are a booth renter, whether you have a salon with lots of staff, I consider you all your own business, your own business entity. So whether you are by yourself or have many staff, the same principles apply.
And actually, you can really take these principles right into your home as well, because in the end, even personally, we still need to make sure that we have more money at the end of the month rather than months at the end of our money. So I hope today, some of the things that we talk about, you'll also be able to use in your own personal life.
Yeah. Well, and that takes me right into my little story.
Well, how perfect. Yeah. We didn't even rehearse.
Yeah, there you go. So, when my husband and I first got together and got married, he had been a banker. So he came from the banking industry and into the beauty industry. He was in sales. And so I had these, I just wrote checks. He handled the finances and I just wrote the checks. Well, and, I like to spend money. So I've always worked hard because I like to spend money. So one night, Rick takes me out for dinner. He takes me to this lovely restaurant. We're sitting there. He has a gift wrap package for me. And what it was those duplicating checks. Because I'd write checks, but I'd forget to write them in and record them.
Yeah.
And so it drove him crazy, because he is a financial, what's the word I'm looking for? He loves to have everything down.
He's analytical.
So that was actually the beginning of my lessons on being more financially astute.
I love it. That's actually a great thing.
So that was my gift wrap package.
Yeah.
So, and he said, this is to save my sanity and save our marriage.
You're still married, so it must have worked.
A lot of years later. So anyway, income versus expenses. And I believe that it doesn't matter how much money you bring in. I've gone into salons that are multi-million-dollar salons, but they have nothing left at the end. In fact, they are in deficit every month.
And that's something that we often forget. We look at lots of big corporations, and we see that, they're making tons of money. But in the end, it really isn't how much you bring in. It's what you do with what you've got and how much you have left at the end. So keep that in mind. No matter how small or how big you are, you can still make good money if you handle your expenses well.
So what would you rather have? A multi-million-dollar business that puts you in a deficit every month, or a $40,000 a month business that gives you $4,000?
No, Tracy, you shouldn't be able to see us. You should be able to hear us and see our presentation, but definitely not see us, and certainly not today, because last night was Thanksgiving dinner.
Yeah.
We're in our tracksuits today.
Yeah. We're just comfy today. Because after the webinar,
Oh,
we
yeah.
are going to kick back and chill out.
You got it.
So that's income versus expenses. I just want you to, wrap your head around that. Not how much you have at the top. What we're going to talk about today is what you do with what's left at the bottom, and how we get you from income to having money left at the bottom.
Exactly. Because I think this next slide is really appropriate because, oops.
Back we go.
Oops. Go forward.
My trigger finger. What is going on with it? So it's I think I had one too many wine last night.
That could almost be a picture of me in the old days,
yeah,
right?
Yeah. Or me.
Because all of a sudden it's paperwork. One of the things I have definitely found in dealing with business expenses and incomes, et cetera, is that if you let everything pile up, it becomes a massive chore. But if you take care of things on a daily or weekly basis, it's very, very manageable.
Yeah.
So don't let this be you.
No, don't let it be you. And please, no matter how small you are, you should monthly be running the totals. I can't tell you, as a consultant traveling across the U.S. and Canada, I can't tell you how many times I went into a salon. I would ask them for their financials, just a running total of what they do every month. And they would say, oh, well, I will have to get that from my accountant. I only do it once a year.
Is that not the most frustrating thing that we've run into, is that we don't know our numbers? And, we are a creative industry. A lot of us think far more about the type of haircut that we're giving. But you know what? We have to really take a look at our numbers. And Catherine, I think you've got a really, really simple system that works for a lot of people that really in the end starts to drive the whole income and expenses and your calendar method. If you might just share of that. It's easy.
Yeah, for sure. And we've talked about this on a previous webinar. And basically, you have to know every single day how much you need to bring in to get you to where you want to be. If you're a booth renter and you want to make $50,000 a year, you need to know exactly what you need to bring in every day so that you're going to be able to hit that target. And so take a calendar and write it down. Write down every day I need to bring in, $552.
Right.
Get explicit.
Yeah, exactly. And then at the end of every day, write down what you did bring in so you can compare it to your goal and to your reality so that you can see where you're sitting.
Yeah, and if you haven't listened to that webinar, I believe it's on our goal setting.
Yeah, it's on the goal setting webinar, and Vagaro will have a
copy
right in their history, so
yeah.
you can check that out. Okay. And I think we might come back to that comment on that too later on when we get into, because once you see what your expenses are, you're going to be able to figure out what that number is.
True. All right, so let's leave this young lady behind. She
looks really worried.
All right, so there are really two.
I think you jumped.
Did my trigger finger?
Trigger finger, yeah.
There you go.
Okay, so the first thing we're going to look at is
income.
Oh, yes, that's the money coming in. I just love it when money's coming in. Don't you just get a thrill whenever we see that? PayPal, PayPal.
Yeah, I love it. And when I was in my salon every day, every time the till went, I was like,
yeah, ka-ching.
I like it. It's a great sound. But really, in our industry, there's really a couple of ways that we produce our income, and service sales and retail sales are the two biggest by far. If you have booth renters, you could add a line in there for rent.
Exactly.
Because you're a landlord, so that would go in there as well. One thing I would say, I like to see a breakdown of 80% of my revenue coming from service and a minimum of 20% of my revenue coming from retail sales.
Yeah, I mean, that is really where you truly need to be to start looking at being truly profitable. Unfortunately, if you look at the percentage column on this sample, you will see that in the current period, the products are sitting at 6.7% of service dollars. So, and the industry average is, Catherine, drum roll.
Oh, I think it's under 10%.
So it's really pathetic. I mean, we really suck at retail sales, you guys, and it's such a huge way to make money in our business. And so we really want you to track it in two separate ways, so you know exactly where you're sitting and where you really want to head to.
Yeah. So what we're saying is, don't lump all of your income together.
Separate. Have
categories. So, and all you need to do is categorize it as services, retail, and then if you do have rent, that's a separate category as well. But then you know where all your income is coming from, and then you can make better decisions when you're looking at your numbers to, what you need to do and where you need to make some changes.
And then once a month, take a look at your checkbook and or your bank statement and look at every single thing that's going out and put it in a column. And those are your expenses.
And really, if you're not doing this right now, if you're depending on somebody else doing it for you and only looking at it, once a year, please, you can pull up sample income statements like this blank one and just start plugging the numbers in.
Yeah, you can get, this is a template like right off of the internet. So all this information is available to you, and it's pretty simple. Don't wait a year to take a look at your numbers. Look at them every single month so that you can see, for example, on this one, if you brought in $3,000 and you add up what you spent, you can see at the end of the month, you spent $23.95. So it gives you a running idea of how you're doing. Just like the calendar, it's going to keep you on track.
And that's really what this is all about, is keeping you on track, because you have to be aware of what your money is doing.
Exactly. Now, this whole list of expenses is, these are just the things that this particular person might have spent that month. And when we go to the next slide, you'll see,
well, there's two expenses, fixed expenses, and then you've got your variable expenses.
Right.
And your fixed expenses, Eileen, are things like
your rent, things that stay stable from month to month, that are sort of what we call written in stone. They don't fluctuate at all. Whereas your variable expenses are the ones that can change with the seasons. Like, for example, your heating bill or your hydro bill or your water bill or whatever. Those are variable expenses that will change with whatever is happening, change with the market or whatever.
Right.
So, and here we are, expenses.
Am I doing this again? There we go.
Okay. So, for example, rent, fixed expense.
Yeah, rent's a fixed expense.
And it's really easy to project your fixed expenses because you can look at them for 12 months and know, okay, this year I'm going to be spending so much money on my fixed expenses. So rent is a fixed expense.
Yeah, and rent, really, a lot of people ask me, well, what should my rent percentage be?
Yeah.
Well, and I mean, it's very variable depending on which part of the world you live in, which, if it's a big city, if it's a small suburb. But I mean, really, rent, if you can keep your rent to 10% to 12% of your total sales, then, that's kind of a rule of thumb.
Yeah, kind of generalities, but we want to give you something sort of to aim at, so that that if you're bringing in around $20,000 in your salon a month, but your rent's $4,000 or $5,000, something's wrong with this picture.
Yeah, and we'll give you a formula as we go down to look at what you need to be bringing in every month. So
yeah,
and then the next two for me are the next two expenses for me are absolutely the drop dead two expenses that you need to know and you need to look at, because I can't tell you, and Eileen, you know this from being on the distributor side as well, how many times I've gone in and looked at people's financials, and these two expenses alone are at 80%.
And these are your variable expenses because they change up and down with what's going on.
Yeah. But, you can't sit at 80% for two expenses, because that leaves you 20 cents. So out of every dollar, if you're sitting at 80% for supplies and wages every month, that leaves you 20 cents on every dollar that comes in.
What about the salon we called on? and the owner was paying his service providers 80% commission. Well, you and I just about fell over.
Yeah, I pay them to stay home.
Yeah, exactly.
Because you'd make more money.
That's for darn sure.
So
can you talk a little bit about the wages, Kath? Because I think this is such an important topic for everybody to really understand.
Well, I mean, if you have employees, when you're paying wages, you really can't afford to be paying any more than 50% commission, if you're a commission salon. Because you're not just paying 50% commission. There's other expenses on top. There's payroll taxes. There's vacation pay. It depends, which part of the world. In Canada, we are crippled with vacation pay. We
have
holiday pay,
unemployment insurance, workman's compensation, Canada pension. I mean, it goes on and on. So, and in every single country or municipality or whatever, you may have different expenses that relate to your wages. So it's never just 50%. If you're paying 50%, you're really paying closer to what? 60.
Yeah.
So
just be really, really aware of, when you are setting out any wages, what you're actually paying out. Because it's not just commission you're paying them on the services they do. It's all the other things that you have to layer on top. So that's a great place to start to look at. Those are the first two places I always look when somebody's losing money.
Yeah, because you got to see what they're doing. Sorry. Supplies.
Yeah.
Holy smoly. I cannot tell you how many back rooms I have been in. Lots.
Well, you used to go in and out of salons all day, every day.
Every day, and we still do. Maybe not as many a week, but I've probably been in the back room of 1,000 salons, and sometimes I am so appalled. And to be honest, you guys, I've got to tell you that manufacturers are looking for real estate in your back rooms, right? So every time, for example, a color company launches new colors, what they're looking for is more space on your shelf. But what happens is that, for example, if you're doing 20 colors a week, for example, and you generally carry, say, 60 colors on your shelf, if your color production doesn't increase, what is the point of now carrying 100 colors? You've now carrying the expense of 40 extra colors that you probably don't need. So sometimes we get seduced by the manufacturers saying, oh, look, we've got this brand new color coming out. And it's really just a line extension, and it's really just a pre-mixed color. So how long does it take to actually mix a color, Kath?
Oh, well, 5 minutes.
5 minutes? That long?
Well, not by the time you formulate.
Yeah.
Really.
Include the formulation,
yeah, you
right?
can look at something, you can formulate, and you can have it mixed. But we don't understand mixing.
Yeah, exactly.
Because they've done it for us.
Exactly. So, but it does cost us to have that extravagance of having pre-mixed colors.
Yeah.
So it's something I just want you guys to really think about.
Yeah.
Because it's costing you money.
Yeah. And the other thing is I've been in back rooms where they have 3 or 4 different color lines.
Oh, don't get me started.
Your money is sitting on your shelf. Trust me, because it's so expensive to have products sit on your shelf if it's not turning. And I'll guarantee you, there's colors sitting there that you never use.
Exactly, and do something about that. Get your sales rep to do a switch to take out some of the colors you're not using to give you colors that you will use. Find the ones that you're not using, because we're talking thousands of dollars that could be sitting on your shelf, wasting money for you. So supplies I think we can do an entire webinar on supplies one day.
Well, it's one of those. But really, it's one of those areas, a few years ago, after I had stepped away from my salon and wasn't there all the time, we really went to some interesting financial
Challenges?
Well, not challenges, but every quarter we were looking at our finances, and it was going like, and our supplies are going up and up and up. And it was, the person in charge of who was looking after the supplies took her eye off the ball. And she freely admitted that. The other thing that we were doing, we were losing color out the door. As soon as we put the camera in, we weren't losing the same amount of color.
So that's a little shocking to think that you've got stylists that are maybe pocketing a bit of color.
And a lot of, right? Yeah, but a lot of times they just think, oh, well, I'll just take this now.
Yeah, they don't necessarily see it in the store, and they don't see the stealing, but it's still.
But we call it shrinkage.
Yeah.
So you have to understand, and if you're not keeping your eye on the ball, it happens. Sorry. You may think you have the best people in the world, but it happens.
Well, and the other thing is, of course, is mixing too much color. I mean, you guys, you are pouring money down the drain. Train your staff, train yourselves to mix properly, because really, the few minutes it might take you to go back and make a second smaller batches than making too much and having to throw half of it away. It's just flushing money away.
Yeah, so I just really want you to think about that. Also, your retail shelf at the front.
Holy smoly.
You have to look and see, because a lot of times I just grab people and when they complain that there's no money left at the end of the month, I'll, take them by the arm and I'll take them over to the retail shelves and I'll say, we're just going to visit your money.
Yeah. Oh, look at that. It's just sitting on the shelf doing nothing.
Yeah, because you do $3,000 a month in retail and you have $30,000 in retail sitting on your shelf.
Holy smoly.
And I have seen that and more.
Oh gosh. Some of the examples we could share with you on too much money sitting on the shelves is pretty scary. But as a general rule of thumb, you should be turning your inventory 6 times a year. Okay, so what that means is if you've got $2,000 sitting on your shelf, that means that your sales per year should be about $12,000. It's as simple as that. So if you've got $50,000 worth of product sitting on your shelf, it means that you need to be having retail sales of $300,000 a year. Mm-hmm. That's just a general rule of thumb, okay? Industry averages. So really think about it.
Yeah, so pay attention. What percentage of income should supplies represent? In my company,
in the back room,
in my company, we have, I think our total that we allow for retail and professional supplies is 15%.
Good rule of thumb.
Yeah. And, we are really, really very diligent with it. Now, every month, I believe that some months you may spend a little more. The next month it might go down. So what we do is we look at our expenses every 3 months. Mm-hmm. Every month we do a running total. We know exactly what we spend so that we know that the next month, if we've overspent in one department, we need to underspend to bring it back in line. But what I do is I give them a 3-month timeline because we can balance it out. Because sometimes you may get a really good buy on color, so you may buy color, but the next month you shouldn't need to buy that.
Exactly.
So it will work itself out.
And remember, we were talking about variable. That's a really good example of a variable expense, right?
Absolutely.
Yeah.
So those two, please pay lots of attention to, because you can find lots of money sitting in there.
You got it.
Marketing. Marketing is an expense on most balance sheets. If you do it well, it can be an investment.
Well, in fact, I think that lots of ways that marketing is an investment. I mean, how often do we hear people say to us, oh, I can't afford to market?
And what I say to them is, you can't afford not to market.
Exactly. Because where do you think, if you need money, where do you think it's going to come from? Because believe me, you're not going to pull it out of your ass. You're going to pull it out of new clients. Oh, sorry, did I say that out loud?
Yes.
Well, it's just in the privacy of our office.
And all the other people online.
Yeah, exactly. But I think you get what I mean, because if you need to be bringing in new clients, you need to be marketing. If you need more money, you need to be bringing in new clients. And how are you going to do that? You have to have some kind of a marketing budget. And again, Catherine, you're great with the percentages because you've worked with them for so long.
Yeah.
What kind of a percentage should they be spending on marketing?
Well, we spend around 4 to 5%.
Good.
For marketing. That's just my rule of thumb, and it works for us. Now the next one, bank charges.
Holy moly.
Most people don't know you can negotiate with your bank, and we negotiate with our bank a lot.
For sure.
To get our bank charges down. You really have to watch them because, they creep up and creep up and creep up and creep up. And credit card charges.
They're horrendous.
Yeah. So you have to be really careful. You have to understand your credit card charges. Mm-hmm. I don't care whether you're a single person or you have multi salons.
Yeah. And we've seen big corporations spending way too much on bank charges because they haven't done the negotiation. As well as, small businesses having incredibly great rates because they were savvy enough to do the negotiation, which actually swings me back to rent. Again, there's something that a lot of people don't understand is that you can negotiate on rent and all sorts of options and clauses in your lease. And a lot of people just say, okay, whatever you say, and really it is a negotiation. So there's a lot more negotiation in our business than we really think.
Absolutely.
And if you think you're paying too much in bank charges, again, Kath, let's take a look at a little bit of percentage on the bank charges.
1%.
1%. So if you take a look and you're paying more than that, you go over to your bank and either shop around or negotiate or whatever, but see what you can find a better deal, okay? Get out there.
And then another expense is your software, which I think is critical. You need to have good software. I think Vagaro is so affordable.
We just love talking about Vagaro to our customers because honestly, it is such a lifesaver. Some of the big platforms that have been out there in the past and the cost salons an absolute fortune.
Oh, for sure.
And Vagaro is affordable, easy, and it's so inclusive. In fact, did you see their post this morning?
No, I didn't.
And they've now got, membership sales available on their site. Yes. I tell you, Vagaro rocks, people.
Well, they're forward thinking.
You got it.
So that's great. Okay, so I just wrote a whole list of, other things are insurance. Just look at your insurance always. Once a year, address these things and see if you can negotiate.
You got
with
it.
them.
Phone around. You'll be surprised at what you can get by phoning around and doing a cost comparison. Don't just take the first one that comes along. You have a right to do a little bit of research and find out that, maybe company B has a better offer for you.
Yeah. So, it just takes a little bit of legwork, but the money it can save you in the long run is well worth it. My grandmother used to have a saying, look after the pennies and the pounds will look after themselves. We were Scottish. So.
Yeah, or dollars. Yeah.
So, it's the same thing as look after the pennies and the dollars will look after themselves. And that's really what with this webinar, that's what we're trying to get you to do, is understand that, it's sometimes the small things or the things that we just take for granted that will save us the most in the long run. So, you have office expense, you have phone expense, utilities.
There's another wonderful variable expense because
the utilities, anywhere in the world are just going to keep going up.
Yes, in fact,
if it's air conditioning in one place, it's heat in another. It's water somewhere else.
In fact, I was just reading a very interesting article in the newspaper over the weekend that's talking about the forecast, the coming winter forecast is again for extreme weather in the east, in the Middle East and through the prairies and Canada and the United States. And so they're talking about the cost of utilities and how they are going to go up, So we have to be very, very cognizant of that. I think we've got utilites here. Utilites. I like utilites.
Oh, I forgot the I. Oh, well, hey.
Travel, our favorite expense.
Yeah, but, be mindful.
Yes, we've got Kath and I. Is that not just what we were saying the other day? Is we have to stop having fun.
Yeah. Well, again, we were looking at our expenses and saying, okay, we need to cut our expenses a little bit. Where can we do that? And so we looked at our travel budget and decided that we would shave a bit off our travel budget and we would make use of the telephone more as opposed to maybe always just getting in the car and
driving
and
somewhere.
going there,
Yeah.
and hotel and meals and blah blah blah. So on and on. But the one expense I always think is an investment is education.
You got it. You got it.
Because we should have an education budget.
Absolutely. And again, do you have an industry average for that?
I don't off the top of my head, because everyone is different. But again, with in my own company, I look at 1%, 1 to 1.5% of what we bring in to put back into education. And
I got to say that for the most part, this is where the manufacturers really do help our people, is in offering free education for.
And take advantage of it.
Exactly.
Ask them what they're going to do for you.
I got to tell you, in 20 years of selling education into salons, and the number of times I've listened to someone say to me, "Oh, I've done that. I've been there. I've seen that." And I always think, it's such a shame, because if you open your heart and your mind to new education, sometimes it isn't necessarily that you see that's going to change your life, but perhaps you'll learn something from the person sitting next to you. So education is really wherever you can find it.
Yeah.
So keep an open mind on education, okay? Because it is so important, not just to keep up with trends, but also for personal development and growth.
Absolutely. And that's one thing I strongly believe in my company, and that we really put a lot into education. I think that that's what keeps people fresh, keeps people engaged, and that's how we grow our business. And
if you hear yourself say, oh, been there, done that, then you need to go look in the mirror and find your own roadblock to development.
Because that would be you.
That's right.
There. So here's just, a quick little income statement that was just a little clearer than the other one that we had up there. So all the things that you could possibly put in there: cost of goods, advertising, bad debt, depreciation, which we don't really have, by the way, furniture and equipment, insurance, interest expense if you have any debt, maintenance, office supplies, payroll taxes, rent, research and development. I love that one.
I like research and development. You could call that education.
Yep. Salaries and wages, commissions, employee benefits, travel, utilities, software, web hosting, and domains. It can be that simple, people. And hopefully, be honest with me now, type it in and tell how often. Does everybody have something like this that they do on a monthly basis? Be honest with us.
Yeah. Tell us the truth. Come on, please.
Because this is all you need to do. It can take you an hour.
And
Sue says obsessively.
Thanks, Sue.
But I'm not kidding. There's more people than not don't.
Exactly. And let's just have a quick look at the cost of goods sold and give a quick description of really what that is.
Sheila says she uses Vagaro reports to track expenses and income. Fantastic.
Adele, do we have a form you can send? Adele, we don't have one on the ready. It's a bit more involved, but if you just Google an income statement off the internet, a salon income statement, you'll be able to pull off a template off the internet.
Yeah, and it's really simple to do.
And QuickBooks is super easy.
Yeah, that's what we use in my company. We use QuickBooks. But if you don't want to get into that, there's so many simple plans out there that you can just put on your computer and plug things in. It's much better to know where you are going.
Exactly. You know where you're going if you know where you've been.
Yeah.
And Danielle has her office manager do it, which I think is fantastic. And April's doing it weekly. Awesome.
Great.
Thank you so much, because we know that you'll be successful.
But really, when your office manager is doing it, then please just go over it, because it's really important to understand what you're looking at and to look at areas where you could save money.
Right. Because when we were talking about the simple calendar, by having this a little statement, this is where you're going to get your calendar figures from.
Yeah, totally.
right? So if you know that I can't see what the bottom figure
Yeah, it
is
doesn't.
there.
It just cut
it
itself
off.
off.
But say that you know that you need to make $180,000 a year. You're going to know what you need to bring in each and every day to make your expenses.
Yeah.
That's the number that you put on your calendar.
And every month you may have a different amount of days that you work. So that's why you break it down monthly too, right? So you can look at the month and go, okay, so I'm working 20 days this month. So this is what I'm going to have to
do for
this month.
20 days.
This month I'm actually going to put 22 days in. So that's, that changes my daily total.
And here's what's going to happen. And, we touched on this in goal setting too, but I think it's so important when it comes to numbers because I really believe by having something concrete like that, it really drives you. And so say you put down that you need that $500 every day and, some days you do 400, and you write it down on the calendar and the next day you think, oh, geez, it's just almost subliminal. You think, I need to make up an extra $100.
Yeah.
So the next day you write down 600 and it's such a great feeling to beat your daily goal that it does drive your business. It does help you move forward. It's incredible.
It's how I grew my business, honestly, from a $350,000 a year company to a company that does multi-millions.
Yeah.
So, and that's what I used. It was a simple system, but I believe that really pushed me to constantly be striving and achieving.
Yeah. So track it, baby, track it.
Okay,
this is one of our favorite things.
Yeah, so here's just a quick formula, is rent plus debt times 7. So rent could be $1,000. Your debt repayment is $200 a month, $1,200. So times it by 7, $8,400 is really what you need to bring in to break even and have, the minimal profit.
Right.
So just keep that in mind. I mean, oftentimes Aileen and I will talk to people and they'll go, well, they're opening a salon and they, so their rent is $1,000. They've got $200. And so they think, oh, well, I need like $2,500 a month to double it.
Yeah. They just double that to think, oh, that's all I need. Well, there's just so much more involved in the cost of running a business. And when you start listing them all and you've seen the list that we've looked at today, that, it's a bit of a fantasy, but, sometimes we get really excited about going out to start our own business, whether it's a new salon or whether you're chair renting. It costs a lot more than you think.
If you're a debt-free business, would it just be rent? Danielle just asked. And yes.
So just your rent.
And one other thing that I would add in there is, oftentimes I often advise people, instead of going out spending a lot of money on furniture, to lease it.
Exactly.
Because furniture is good for about 5 years, and then we want to turn it over. And in fact, we just did that with the 6 pedicure thrones that we purchased, and we leased them.
And that's one of the things that we actually haven't talked about is, capital expenditures. I think maybe we'll save it for a whole new webinar. But I really believe in breaking it down into that monthly cost, because it's a heck of a lot easier. Well, those pedicure chairs of yours are fantastic, but they were what, like
$19,000.
And so, what would you rather put out, $18,000 or $19,000, or have it taken care of out of your revenues on a monthly basis?
The other thing, if I'd just gone on and without leasing, I had just paid the $19,000, I can only write that off as depreciation.
Exactly.
Over a number of years. I can write the whole expense
of the lease
off every month. So.
Exactly. So, those are things too that do take an accountant to talk to, because we have found that there are different criteria for everybody between, Canada, United States, UK, or wherever.
So, hey, good question, Shayla. What percentage should a single salon owner who is incorporated pay herself? So when you say single salon owner, so you are just by yourself. Is that what I'm gathering?
And I think actually the next slide might answer that for you, Shayla.
Because we know that there's a lot of people like you out there, the next slide we prepared was about. So it costs the average renter or booth renter 45% of what they bring in to cover expenses. Now that's if, I'm going to cover myself here. That's if you are running it like a business, and you are, showing your income, you're paying your taxes, you are doing all of those things, it costs about 45% of your income to cover all those expenses. So great. And I feel really, really, really strongly that if you are a booth renter, or if you're a salon owner and you are not declaring your income, you are cheating yourself.
Absolutely. Kath and I had a brief chat about this earlier today, because there's a couple of reasons why. First of all, not only are you cheating yourself, but you're actually also cheating your community in a way, and you are part of the community. When we pay taxes, we are part of a greater community. We're contributing to roads, to schools, to hospitals, to all sorts of things that help our greater community, and that is who we're all part of.
Yeah, and it really, we're trying to bring up the professionalism of our industry. We don't want to be an underground industry that, is pulling money out from under the table, essentially, because you can't have it both ways. And I spoke to a salon owner about this a few years ago, and I said to him, I said, look, you can't have it both ways. You can't be taking money out without any record of it, and then expect at the end, when you want to sell this place, to have a saleable asset, because it's just not going to happen. The other thing is, if you're a booth renter, you are essentially your own business. What happens if you need to go to the bank for a loan?
And you can't get it because you're not declaring enough income.
Exactly. So, really think about it. So anyway, that's my rant. And whatever you do is entirely up to you. But, I really believe that we should be professionals, and we should declare our income and what we bring in.
And be proud of it.
Absolutely.
I often say, I pay a lot of taxes, and I think, great, I pay a lot of taxes because I make a lot of money, and I'm damn proud of that.
But as business owners, there are definitely legal ways to minimize our taxes.
And
when I say
that too.
legal ways to minimize our taxes, if you get a good accountant, they can help you to do that.
Exactly.
So, to go back to your question, so as a renter bringing in or a single salon owner, if you want to start with the end in mind, so if you have your figure in mind, if you want to make $55,444 a year, then essentially at 45% of your income, so you're bringing in $8,400 a month. If you take that figure of 45%, you're going to be making $4,620 a month, which will give you your $55,000.
Exactly. So, it makes it pretty easy to figure out, if you want to make $1,000, there it is.
Yeah.
You need to know.
Start at the end. So this is what I want. Same with salon owners that have multi-chairs. If this is what you want your business to do, start with
the end
result and work backwards. But that's the figure I would use, is about 45%, because we know a lot of times if you are an independent, then, sorry, I'm talking so much, my throat's going, that you will pay a little more for supplies. Am I correct, Eileen?
Absolutely, because if you're a single person, you often don't necessarily have the funds to purchase in volume, and so you often end up going to the beauty stores or whatever, and there is generally a surcharge to shop at the stores, whereas when you're buying through their major warehouses, you're often getting a price break. So being smaller often means that you can't buy in volume.
Yeah, and in saying that, it makes it even more imperative that you then have a good ratio of service to retail sales.
Exactly. Now retail becomes really, really important.
Yeah, because we do have a better profit margin on retail than we actually do on services, because we have to put out all those other costs.
Exactly.
So let's go to the next one. And this is a great rule of thumb. I want you to think about this. For every $1,000 you save in expenses, it means $3,000 less in income needed.
Right.
Does everybody get that?
Yeah. So you used a great example this morning.
Yeah. So, and this is an actual example from years ago that came up in a consulting appointment. One of the salon owners, they were partners. They wanted to buy designer purses, and they were going to buy them through the salon as, you know, like a laptop bag.
Yeah. Yeah.
And as an expense. And so I looked at them and I said, okay, so let's take the cost. And then when I told them how much extra they were going to have to bring in to cover them, then they thought twice.
Exactly, because all of a sudden now it's like, okay, if I'm spending $1,000, I now need to increase my revenues by another $3,000.
Yeah. So for instance, going back to the pedicure tubs that we just purchased.
Right.
So if it's, let's say it's a $500
a month
lease cost every month, I know that in order to make my money for that, I need to be bringing in $1,500 more in pedicure income.
Exactly, to make them pay for itself.
Right?
Yes.
So it's a great way of thinking. It makes you stop and think anytime you want to do a purchase. So what am I going to need to make this money back? Does everybody get that one?
Yeah, I hope so, because that's a really, really powerful little tool.
Yeah, and I think we should all stop and think about that. In fact, even in our personal lives, we probably should stop and think about that.
Yes, we should.
I'm sure my husband would agree with that. The banker in him.
So for every check, I need 3 deposits.
Oh, great. So that's a little one. So where can you save? And we've gone through this, you know, as we've gone through the big ones. The big 3, though, for me are supplies, wages and commissions, and credit card fees.
Exactly. And, you know, when you're thinking about where you can save, there are things that you must spend money on. And, of course, these are all of the ones, right? And you must spend money on marketing and advertising. You must spend money on other stuff. But here's where you can really, really sharpen your pencil and take a look at what you are really putting out and what it's really costing you.
Now, credit card fees, Eileen, we did have somebody write an article for us on credit card fees a while back.
Yes, we did.
If anybody would like it, just email us, because it's really interesting, because it's really hard to read those statements that we get in.
It is. They are very, very convoluted. And I think in lots of ways, they keep it convoluted to keep you confused on what you're really paying.
Because a lot of people think they may be paying 2%, but actually you may pay 2%. What is our email? It's at the end.
We'll share it with you, Adele, at the end.
We'll share it with you at the end. So you may think you're paying 2% for credit card fees, but it may be a very small portion of your credit card charges that are being charged at that. Depending on the cards that the client carry, if they carry the premium cards with travel rewards and all of these, which I'll tell you, most people do now, it can go up to 5% of your sales.
Right. And then there's the bank charges on the things. It just gets so convoluted sometimes. I just get really frustrated because they seem to be hidden costs so much of the time.
But just know there are companies out there now that you can they will actually compare, that your costs for you, and some of them can save you money. So, and I've seen small salons that have saved $200 a month. Now remember, $200 to $300 a month. If you save $200 a month in credit card fees, that's $600 that you do not have to bring in.
Exactly.
So that's money that's going to your bottom line.
And that's
going right to your bottom line.
And that's when that 3 times your expenses really, really has a powerful impact.
Yeah, right? Absolutely. And remember, everything we're talking about today is all about savings that can drop to your bottom line.
Right. Because, one of the reasons that Kath and I got started as a profitable salon owner is because the statistics on profitable salons is so pathetic. It's only like 5% of salons are actually profitable. And the margin is so small, it's ridiculous. But you know what? We can and shall become more profitable with the knowledge that we incorporate into our businesses. So,
so if you do, if you do nothing else after this webinar, I mean, if you pick up a couple of things from it, if you just go back and look at your supply categories, your wages and commission categories, and your credit card fees, I think you will be, you will save money somewhere.
Exactly.
And then find out and the other thing is, look at what you do on a monthly basis in retail sales. And Aileen gave you, you need to do 6 turns a year. But if you do $3,000 a month in retail sales and you have $20,000 sitting on your shelf, go visit your money.
Yeah. Send us pictures.
And the way that you can save money there is you can look to see what moves, keep those on your shelf. I always say if you sell, 6 of one product and that's a good seller for you, you should have 12 sitting on your shelf.
Exactly.
Because you never want to run out of it. But all those other things that you don't have, that don't move, you have to have them sitting there for 3 months. If they sit on your shelf for 3 months, you should be putting them on sale.
Yeah, and in fact, we have done a webinar on retail as well, and we've covered this. If you'd like more in depth on retail and how to make it really pop for yourself, go back and check out Vagaro's past webinars, and you'll find our retail webinar.
Absolutely. So, I mean, I hope you say you can go back and you can save money just from some of the things that we've talked about. And Aileen loves this one. I mean, we want to talk about, we've talked a lot about expenses.
What's the difference?
What's the difference, expenses versus investment?
Because an investment, in a way it's an expense because you're putting money out, sort of like your chairs, right? But here's the thing, as an expense is a liability on your balance sheet, but an investment is an asset. So you have to really think, sometimes when you're spending money, you have to think, is this going to bring me money back? And again, let's use your chairs again, because I think that your chairs end up being in the asset column, and they are an opportunity to earn more revenues in your salon because of the, and I said, well, Kath, why don't you just, put in a simple bucket and do a cheaper chair? And you said, no, we generate so much income because we have the best chairs in town. That is an amazing investment for that salon, right? Looking at a new revenue stream for your salon would be an investment. Not an expense. And
I can talk to that because we looked at adding a new revenue stream to our business, and that was in the hair loss.
Yes, exactly.
So, we do trichology, we do wigs for cancer patients and alopecia, and we had to put money out, but we did that because long-term, it's a great investment for us.
Exactly. And you're already reaping the rewards from that investment.
Yes.
And here's another investment that's really important. When Kath and I joined forces as the Profitable Salon owner 3 years ago, we invested in our own education, and I think it's probably one of the best things that we ever did. We invested in our own personal development, and this is a result of all the work that we've done.
Yeah.
It was an investment in ourselves. So I don't want you to forget that. So invest in yourselves, invest in your business, and really think about it from a different point of view from expenses, okay?
And really keep your eye on the bottom line, because it does not matter what you bring in at the top if you keep nothing
at the bottom.
At the bottom.
You got it.
It's all about bottom line thinking.
Yeah. And Adele, this one's for you. Here's our information. We are www.theprofitablesalonowner.com, and what you will find when you go on our website is an opportunity to subscribe to our free newsletter, and that's a time investment that you can put in building your business, because every week we bring you tips and tricks to help you build a profitable salon.
True.
And of course, we are always at the end of an email. We are info@theprofitablesalonowner.com.
And thank you for your time and attention. And as always, if you take one golden nugget away from this webinar, it was worth the investment of your time.
And the other thing is Susie from Vagaro will be putting this up because we've recorded it. So she'll be putting it up. And if you want to hear it again or get a copy of it or whatever, follow the links that come out and you can listen to us all over again. And thank all of you so much for joining us today. Can't wait to talk to you next month.
Have a great day.
Happy Thanksgiving.